Yeah, boy! Good morning, how are you? All right, if I can find the video, I'll stop it here. There it is. All right, and then I got to get back to YouTube, and then I got to mark this. All right, now I'm ready. Good morning, everybody. Welcome to Forex.Today. Comment allez-vous? How are you? Today we will conduct technical and fundamental analysis. What a shocker. Thank you for being here this morning, bright and early on a beautiful Friday. Wonderful day to be alive, don't you think? So let's get on with it, huh? Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Yeah. G'day, mate. How are ya? How's your mum? So, we got lots to do today. We're going to look at dollar pairs, yen pairs, gold, oil, Bitcoin. What do you think? Bank stocks down today? Is that what you're thinking? I think risk off today? What do you think? So we'll take a look and see what the markets are doing. We'll start, I imagine, with the stock market, and then we'll look around. Yeah, indices all down today. Smells like risk off. Okay. Anywho, we'll go through that. Feel free to ask questions. My name is Wayne. Been doing this a while, so I might be able to address some of your concerns. Let me know how I can help. Next week's a big week, right? Actually, is there a lot of important news? No, not really. Right? No, there's some sentiment next week, consumer confidence and that kind of stuff. I don't care about any of that nonsense. So really, what I've been doing this week is preparing for next quarter. And I asked in the survey if you plan on attending on Monday. Now, bear in mind, it's going to cost $11. Because it takes quite a bit of my time to do it. So if it's not worth $11, I don't want to do it. Pretty simple. So buyer beware. Now you might say, well, Wayne, why is it $11, not $10 like last time? Inflation. That's how it works. I just thought it was a funny lesson. So hopefully you want to attend. Let me know. Complete the form above. I will give you a link, by the way. But that'll happen. Noon, Paulo. Noon. New York time, the center of the universe. That's right, Denise. So banks are down today, I think. I might even have to get out of my Truist early. Just wait. Maybe I'm in too early. I have to consider these things. So the different modalities. If you like learning from videos, I recommend you start at fxbootcamp.com. It's $88 a year. Yeah. But you get 88 hours of real lectures, not just some guy babbling over a chart for 88 hours. No, literally like PowerPoint slide lectures. You will find it very educational. I promise you that. If you prefer reading a book, whether it's digital or a paper book, you can buy my book, Tactical Forex Trading. Cool. If you prefer learning hands-on, you should join FX Bootcamp and then upgrade your account to one of the live trading groups. They're not very expensive. You also need a foreign exchange brokerage and trading platform for trading. I like Trader's Way. They earned my loyalty and respect. A link is in the description below to tradersway.com. You can click the link. You can put your browser in incognito mode and click the link. You can not click the link at all and just type it so that nobody can track you. Cool. You can do any of that. But please just visit tradersway.com. Check them out. In about 30 seconds, you'll be in the back office. It's nice and clean and organized. And you download MT4 or MT5. You can install, if you're a member of FX Bootcamp, you can install my chart templates and all that kind of stuff, all the tools you get for free. Sweet. Install them, play around with Trader's Way, check out the execution speed, check out the spreads, check out the swaps. It's all good. And then you're like, oh yeah, and Wayne recommends them. Yeah. Tradersway.com. If they earn your loyalty and respect, maybe you'll open up a real account, huh? When you're ready. Don't rush it. When you're ready. When you are ready. Got to keep an eye on the time. I have to call Japan. Anyways, hey, here we go. This is where you sign up for the presentation on Monday. I'm going to do it through QuantBox. How much is day trading? $1.99 a month. That's trading Sunday, Monday, 2 live events on Tuesday, Wednesday, and then Thursday, plus all the videos. But that comes with your base membership. Okay? It's a lot, Joel. It's a lot. How long was our meeting yesterday, guys? Was it 3 hours? 3.5 hours? 3 hours? Somewhere in there. At least 3 hours. I had a great time. Oh, 3 hours and 5 minutes. But, roughly. Yeah. Yeah. I had so much fun. Yeah. So anyways, on Monday at noon, I am going to give you an outlook for the next 3 months of trading. Like last time, I will dive into various data sources, public, private, governmental, and we'll look at the stats. Then we will talk about the Fed, and we'll talk about market positioning and timing, and then we will put all of that together. And we will look at seasonality, and we will put all that together and try to thread a trading theme for the next 3 months. I did this in very early January, and I think I was generally wrong on January, but generally correct in February and March. I didn't expect a stock market rally in January, but remember, February and March, everything came down hard. And that's what we had planned. So really, it seems like generally the outlook for Q1 was pretty good, just the timing, right? Took a while for the market to agree. I think that's how it went. I'm generally satisfied with what's been going on. What's going on? Nothing's right, I'm torn. So I'll just pop that in there, and I will see you then. And no, you do not need to be a subscriber to QuantBox. This is just for the presentation. No, everybody in the world is welcome. But it just makes sense that if I'm going to do analysis, fundamental analysis, it should be through QuantBox. So everybody is welcome. But you have to pay the $11. Yeah. Boom. Bada bing, bada boom. Cool. All right. Right. I want to start, well, let's start with the indices. Okay. A little bit of dollar strength there. Holy smokes, yen got strong. Okay. Holy smokes. And that's very much already on our radar. As you probably know, I'm a bull on the Japanese yen. Not a bear, a bull, meaning all these would fall. Can anybody confirm that? That you know I'm a bull on Japanese yen? And you could probably explain to somebody why. Oh, awesome, guys. Yeah? Yep. 2 people said yep. 3. Cool. 4. Yeah. Good. That's strategy, right? Right? That's just strategy. It's not tactics. And then from there, you got to create your tactical plans. Okay. So like, I don't know. I think look at, if I zoom right in here, you can't sell it now. Like, dude. But up here is where you should be short. This is where, in my opinion, you're right. You definitely need to be, and you can, I already have it drawn here. Oops, that's from last night. I already have it drawn here, as you can see. So, but that's a tougher one. You have to wait. But this is the for sure one. But here's the thing, folks. Now that it's happened, it's too late. If you sell something because it's falling, you will lose money because it's already fallen. So this is now profit taking for CAD yen. Will people take profit? I don't know what they're going to do. Stop thinking that way. It's just the price where probability is extreme. If they don't take profit now, then 82 is where they'll take profit. But we're at 94. They should take profit. They should take profit. And this was kind of what it looks like for next week. Okay. Now this is getting tricky because it's fallen too far. We're way out of position now. Way out of position. So if I were me, okay, I would pay a lot of attention to the area from here to here. This is an Arctic turtle. In my humble opinion, 80.67 is where people should get out, but they can see 80.37. How many people here have seen the second Indiana Jones? Where someone tries to steal the Holy Grail and the ground opens up and they fall into the crevice as the ground opens and they drop the cup and it's just hanging there on a ledge. And then Indiana Jones, he wants to get the cup. So he jumps for it and he's stretching and stretching and stretching. And if he goes 1 inch further, he'll probably fall into the crevice, into nothing and disappear forever. But he stretched his hand out as far as he possibly could, right? Do you know the scene I'm talking about? Well, that's what's happening now. People are stretching to hit that M1 and then snap. Okay. The Last Crusade, yeah. Yeah. It's pretty good. So anyways, that's where we are now. Once again, way too late. Way too late. Do bears sell low? No. Where do bears sell? High. We got to go up 100 pips before you could probably sell this. Okay. Does everybody understand that you're supposed to sell at these moving averages? Right? That's the whole point of my book. It's the first thing you learn at FX Bootcamp. Dynamic level of resistance. I mean, that's the whole point. So what do you do down here? Take profit. Same to you, Richard. And you can kind of see this theme across the board. It's about the same with Aussie, yada, 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 CAD, yen down. Yeah, they're all down, but it's to me, it's moot because it's already happened. Whatever. Okay. But I can tell you in the swing trading group 4 weeks ago, we created the idea that these are going to turn down in the month of March. That was the strategy. In the month of March. Okay, so somewhere in the month of March, you needed to become bearish. That was the strategy. Technically, on a 4-hour, that occurred right there. Sell the rips. Holy smokes, I'm getting tired already. All right. Commodities. Commodities. Markets are opening soon, so Bitcoin's trying to get back in the game. Stuck between a rock and a hard place. You got the pivots and moving averages as support. You got the top as resistance. Okay. I was short gold not long ago. I'm not short gold. I think there's a high probability that gold does continue up. Okay. I think it could go up. Way up. Way up. Way above 2,000. Hey, things have changed in the last few months, huh? I'll talk about that on Monday. You want to know my outlook for gold and why? Join me on Monday. There's the link. Oil having a tough day today, huh? Kicking off resistance. 71. Now we're down to 67. Holy smokes. That's a big risk-off sign. Awesome, Frankie. It's going to be good. So my WTI, I think the ultimate price is 60. I don't know if we can get lower though. I don't know if we can get to 60. Rig counts are up. Okay. And reserves are normal. So that allows for oil to not go up if you're a bear. Okay. But we have this issue where demand might be higher than people thought, right? I saw that, Jim. You're right. What matters, Jim, is not the price. It's that if 100 people attend or 4 people attend. And if it's only 4, they're not keeping up with inflation, right? You said 491. But the issue, it's not the price, right? Price is irrelevant because it's the value of the unit of account, right? How can you pre-order the Outlook? Right here. Okay. So this is an interesting concept, actually, even though it was coming from a joke. CPI is only relevant to you in terms of, how would I do this? You only care about CPI if it's greater than or equal to GDP. And you can say, well, of a country, but what if it's just you? What if this year you make, or let's say, what if last year you made $100,000 and this year you made $1 million? But CPI is persistently at 6%. But your income growth is 1,000%. Or wait, no, what did I say? 100,000 and now you made $1 million? All right. Yeah, 1,000%, right? 10x. Okay, do you care? Is that your primary concern in life? You're worried about headline inflation? Right. But that's the same with the country. So you get a lot of emerging markets that might have 10% inflation, but they're growing at 20% a year. Well, so it's only relevant, right? So what I was saying to Jim is if prices went up, 1,000% in 10 years, does it matter? Well, I guess I got it the other way. I got it over here. Okay. Does it matter? It only matters relevant to your productivity. Right? So in 10 years, if prices go up 1,000%, but only 4 people show up, it's because everybody else can't afford it because their productivity is lower than CPI. You see? So if you're not productive enough to keep up with CPI, you're in a world of hurt, right? So, I kind of look at the economy that way. How productive is the economy relative to the change in price? Okay, so imagine the days of 3% GDP, 1.8% CPI. Well, Richard, a lot of these economic models are a bit esoteric, where you're like, right? It's hard to translate into reality. So if I can somehow create an analogy that helps explain it in the real world, then sweet. So if you got high inflation, you need a hustle, right? Sky Killer says, hey, the S&P didn't change. Powell said they could raise rates. Well, what's the interest rate right now in the United States, Sky Killer? Two trailer park girls around the outside, around the outside, around the outside. Bum, 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 bum. All right, how about everybody? What is not the yield, what is the Fed funds rate in the United States of America? Thank you, Santiago. Yes, Santiago's nailed it. 4.75 to 5. This is created by the trading desk at the New York Fed through open market operations. If you don't remember all this stuff, you're like, open market operations? Yeah, go log into FX Bootcamp and do the monetary course. It's about 12 hours long. And you'll learn about central banking. Okay. What is the projected terminal rate according to the dot plot of the current summary of economic projections? $5.125. Sweet. No, 5.1 was December SEP. It's slightly higher. 5.125. What does that imply? Are interest rates currently higher than that or lower than that? Okay. So then, since interest rates currently are lower and they're projected to go higher by the people that change the interest rate, they're saying, right? And Chair Powell said they want to continue. Great. So they go to 5.0 to 5.25. So what rate is in the middle? Okay, so what they're telling us is one and done. Guess who's back? Back again. Shady's back. Tell a friend. Guess who's back? 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 Okay, anyways. It's nice stuff, huh? So we'll go through that in greater detail on Monday. Again, I'll just keep popping a link every once in a while, just so people know. It's my job. Sorry, just looking at a bunch of things. All right. Bitty, bitty, bitty. Can't you see? All right. So the trend setup didn't work. This is the range setup now. And I think you're going to want to have sort of a double range going on here. Bitcoin, Bitcoin. Okay. This is one we talked about, was it yesterday? Okay. Exit zone. Looks like we were correct on that. We also talked about this, predicting a move back to the central pivot. Sweet. Is that right, Richard? On what they thought? Will the presentation be recorded if you miss it? Yes. I typically hold it for 2 weeks and then dump it. Maybe even only 1 week. I mean, look, if you don't have time over the course of 7 days, then it's not a priority, right? So I'll hold it like a week and then I'll dump it. Because I want to get the concepts across. I don't want you coming back like 8 weeks later and combing through it to figure out what trade you should be doing. No, it's not a signal. It's like rationale, right? So you should be able to get the concepts across. Right? You know what I mean? It's conceptual with facts and figures and logic. And you should be able to carry it with you. But it won't do it for you. Like, for example, in the swing trading group, if I say at the end of February that I think March will bring yen strength, and I go through 3 or 4 or 5 reasons why the yen will get strong. And I say, I don't know if it's today because today the yen is weak. I don't know if it's tomorrow. I don't know if it's next week. But for sure, by the end of March, the Japanese yen will be strong. And now, if 4 or 5 weeks gone by and you haven't bought it by now you're on board because it's already happened, but it's already over. Now it's over. Now you want to buy the yen. But you had 3 or 4, maybe even 5 weeks to prepare and actually do it. So now that it's done, now you want to sell it? Oh. Right? So my goal is to get the concept across so that you can practice execution. Okay? Anywho. Once again, this is a take profit zone. This is an out. This is an outie, not an innie. Okay, that's nice. And it's coming off. That's great. That's logical. Great. What about ETH? Can we get ETH to go north? It's holding. Okay, it's holding. It's been now 2.5 days. It's holding. It ain't wrong. Picked up 500 pips. Nice. So crypto, sort of a mixed bag right now. I think I'd watch Bitcoin. If we get a break on Bitcoin, the stock market's probably going up. Okay. Oh, right on, Richard. Yeah, I teach during these live events. Yeah. Why not? Yeah, why not? Yeah, that gold, yeah, that's going to be the interesting one, I think. And now that the stock market's come down this much, it actually might be an interesting buying opportunity. The price is right, the time's not right. But I think it would be great. I don't know if it'll happen today, but I think it would be great if we had a big day like this and then that like that next week. Wayne, do you ever enter at market? Almost always. I love pulling the trigger. I love pulling the trigger. I think I enter at market more than I limit in. I love drilling in and pulling the trigger. There's something about it. I love that sound. The two greatest sounds in the world, that sound that the platform makes when you enter a trade, and a golf ball dropping into the cup. And if you're an alcoholic, probably the sound of ice in a glass. Those are probably the three best sounds ever. Gold and dollar were rallying. What would be the reason for this sort of divergence, if you will? How about a slowing economy and persistent inflation? Think about it. Both. It's both. See, we're taught to be binary because we have to have biases. But there are situations where both is the answer. You're like, Wayne, you can't have low growth with high inflation. Yeah, you can. Hmm? Can you think of a country with low growth, high unemployment, and high levels of inflation? How about socialist Europe? Man, it was like Cuba. Yeah, Cuba is just such a fascinating place. I just cannot wait to get back. It just blows my mind. And I've been around the world. I've been around the world and right? I've seen a few things in my day. It's just so fascinating to me as a capitalist pig dog, penny pincher. How can I make another penny? How can I make another penny? How can I save another penny? Right? Capitalist pig dog, right? But to see 30 people standing around doing nothing for hours on end, knowing that they do it every day, it's just mind-boggling to me. And then you realize the goal is for everyone to have a job, not that the job does anything. It's just so amazing to me. I'm like, what are you guys doing? They're like, we never do anything. I'm talking about a hotel with 30 employees and no guests. Well, in a capitalist pig dog country, you lay everybody off and you shut the hotel down and you take your loss and you move on and you go somewhere else. But to see 30 people standing around doing nothing day after day after day after day after day, hour after hour, just standing and sitting and staring at their phones. Set up the restaurant, put out the plates and the glasses, and then stand around for 7 hours, and then take all the plates and glasses down and wash them and put them away. And the next morning, show up to work, take out all the plates, put them out on the tables, grab all the glasses, put them on the tables, grab the tablecloths, fold them all, put them out there. Take the silverware, put them all out, make sure they're all beautifully clean. Wait 7 hours, take the glasses back, take the plates back, unfold all the... I mean, oh my God. I've never seen anything like it. So yeah, they're just different economic choices. I'm not saying it's bad. There's an economic consequence. That's all. It's just different. So you make choices, right? You guys remember that economics is the study of the choices you make because of scarcity? Yeah, maybe that's why Canadians like to move there to retire. When you hit a certain age, you want your days to go for an eternity. Right? You can almost see it like the doctor comes to the patient and he's like, well, I got good news and bad news. Well, doctor, give me the bad news. Hit me with the bad news first. Well, you only got 3 days to live. Oh, God. Doctor, that's horrible news. What could possibly be the good news? I recommend you move to Cuba today. Yeah. Oh, for sure, eh? Because the 3 days will last forever. Forever. And your funeral will be cheaper in Cuba. Yeah. What does a basic funeral cost in the United States? $7,000. You're like, really? It's incredible, but true, yeah. Yep, I like Cuba if you're rich. Oh my God, what a wonderful place. So anyways, I'll probably be there, I don't know. I'm thinking maybe November, December, October. I got Thanksgiving's in there, huh? October? Halloween, maybe? But Sky Killer says, why did the S&P 500 move down if they only raised by 25 basis points? Okay, well, let me go back to that, everybody. It's important. Now, look, I covered this live, by the way, Sky Killer. Yeah, we've gone over this almost every day. Yeah. We even did it live within seconds, okay? But let's not hold back. I don't hold back. So I hope, how about this? For everyone that's not a member of FX Bootcamp, I'm going to give you so much value in the free webinars that you're going to feel bad, maybe even a little bit shameful. And you're like, oh, dang it, this guy's just giving me a pile of gems, a bag of pearls every day. All right, I'll join his FX boot camp just because I feel like I owe him something. Good. And I'm going to spend it on vintage wine. Okay. Yeah, Jim, and $7,000 for a budget funeral. Yeah, for sure. I bet you it's cheaper in Cuba. Okay. All right, let's go back though. I mean, David, think of it like the trailer park princess that has a giant wedding. And she's got a fabulous dress. And like 30 people show up. And there's white roses on every table. And I'm like, really? Huh? Every girl's a princess. And she's going to have a princess wedding. The other thing about America is really interesting. There's so many interesting things. So I have kids that are preparing to go to college, and we get all kinds of mail from universities of all kinds. And we're looking at all kinds of different universities all around the United States. You can go to a first-tier university like Ivy League, Harvard, Stanford, Princeton, Yale. Okay? You can go to the next level down and you go to like, University of Georgia, University of Virginia, one of the UCs, well, that's not a good example. But anyways, these other schools, University of Michigan and all that kind of stuff, right? And then they're the same price as the Ivy League schools. Then you go another step down, Georgia State, right? Whatever state school, right? Go through all the lower tier schools. And they're the same as the higher tier and the same as the Ivy League schools. And then you go to like the bottom tier, almost like they're universities, but dude, they're basically community colleges. They're still outrageously expensive. So it doesn't matter if you're a C student, B student, A student, or genius. You're going to pay about the same. Unless you're like going in-state and getting, grants and all that kind of stuff. But if you're going to go to the university of your choice, they're all about the same. And to me, it's incredible. I'm like, why would you go to the University of Georgia and pay the same as Harvard? Why not just go to Harvard? Why not just go to Yale? Just go to Yale. UGA is fine, but like, it's the same price as going to Yale. So why don't you just go to Yale? Because your whole life, people will go, holy crap, did you go to Yale? I guess you're my boss now. You go to University of Georgia, good school, and they're going to go, oh man, your football team kicks ass. Okay, anyways. So going back to this question. The Fed raised 25 basis points. That wasn't even the news. Okay, that's it. That wasn't even the news. So if you're like, why did the S&P 500 fall if the Fed only raised by 25 basis points? That's not what happened. Okay? It's not what happened. We already knew that that was going to happen. So that was already priced in. So then why did the S&P 500 drop? Powell said no cuts by the end of the year. And it was instant. It's That's what happened. And it was instant. I was screaming and yelling. Okay. Okay. That's it. And those were priced in. They had to be priced out. David says, non-trading question. How to use debt and credit in a good way? Debt and credit is just leverage. It's beautiful if you buy assets. If you use debt or credit to buy non-assets, you are poor. Think of it. If you're repairing your broken down car with your credit card, you're poor. You're borrowing the money to pay for your broken down car. If you're putting food on your credit card, you're poor. If you are buying a television with your credit card, you're poor. Why did you put it on your credit card? I ain't got no money. You're poor. Now, don't get pissed off, by the way, when I say you're poor, you're poor, you're poor. What an arrogant prick. Just be quiet for a second and listen if that's you. Just settle down. If you borrow money to buy non-assets, you will never increase your net worth. And that's what we're talking about. Okay? That's what we're talking about. You only use debt to purchase an asset. What is an asset? An asset has a positive expected outcome. It will go up in value and or produce income for you. Your money, your debt will make you money. If you buy a TV, you are guaranteed to lose money. And you've taken a form of capital and completely wasted it. So if you buy a TV with a credit card, your priorities are sorely misaligned with reality. Right? Yeah, that's right, Maida. But I like to talk and listen. I like to ask questions and listen. And it is fascinating. It is, to me, an economist, I mean, it's a social study. Okay? So I'm interested how, right? And you're right. Hopefully it's a dying scenario, right? Like, yeah, right? Like, I don't think Cuba will be liberated. It'll just sputter out. Like a candle in the wind. Okay. So anyways, guys, the secret to wealth in mature economies around the world, which is the best way to get rich, is to live in a rich country, right? The number one most important thing is not how much money you have, it's how much credit you have. How do you have credit? You have high income relative to your debt, which means, right, you make a lot of money and you don't have negative debt. So how do you have positive debt? Okay, you buy a house. Why can you get a house? Because you have a good job, you have good income, and your credit score is good. So a bank says, okay, we'll buy a house with you. We'll give you 80% of the money. But if you screw us over, we take the house. And you're like, no, I'm reliable. I have money and I'm reliable. And they're like, good, we'll take a chance with you. And they co-invest. That's what debt is. They co-invest. Now, they're only asking for a measly 5%. But over the course of 20 years, your house should double. The bank's only asking for 5%. You keep the other 95. It's a sweet-ass deal. Okay? Now, over that period, how do you, the debt to income? Well, in the beginning, all your income is going to pay for this mortgage, right? But as the house appreciates, so let's say the house has gone up 30%, and somebody looks at your net worth, well, you own a house. Now you have paid, right? Now you own 25% of the house because you've been paying the mortgage for a while. And the bank only owns 75%, but you have 95% of the upside. And the value of the house has gone up by 30%. So now they're like, okay, you have a smaller mortgage than you used to, the same amount of income, but the house has gone up 30% in value. Okay? So now 35% of that is not debt. You see? Now you have a net worth that is growing. You can get to the point where you have enough net worth in the first house that you borrow some more debt from a bank and you buy a second house. And they're like, well, if you screw us over, how are you going to pay us back? Well, you can take the house. Plus, I have this other house, which already is up 35% in equity. Oh, sweet. You seem reliable. You have good credit. You have good income. Okay? You always pay your bills on time. You always pay your taxes on time. And you make wise investment decisions. We would love to be a co-investor in your new property. Taking on more debt. At some point, you'll have millions in debt. And somebody might say, oh, he bad. Right? You got lots of debt. This guy's loaded with debt. What a loser. That's not the way to look at it. We are told debt is bad if you buy televisions, if you buy cars, if you go on vacations. You see? Because now that's not investment, that's consumption. And there's 0% return on investment with consumption. Okay? Yeah, cash insomnia, exactly right. Okay? If you make $200,000 a year and drive a $100,000 pickup, you're poor as dirt because that's just stupid. It's financially stupid. They're guaranteed to grow old poor. Because when they're 70, that pickup truck of theirs is going to be worth 0. Now, one of the things I taught, I think 3 weeks ago at FX Bootcamp, I taught everybody how to retire with millions. And it costs, what was it, $10 a day? I think I taught people, if you're around the age of 30 and you start saving $10 a day, you will be retired with several millions. Not just 1 million, probably closer to $2.5 million, depending on a lot of different variables, but the concept is sound. But here's the secret, right, Cash? If you're 20 and you buy a $100,000 pickup, it ain't going to happen. Okay? You're not, right? You're not going to retire rich. It's just You're not even on the right planet. Okay? So that's the difference with debt and credit. Okay? If you're using it for leverage, it will enhance your return. So I want you to think about this. Let's just try to make the numbers easy. You buy a house. I guess I'll write it down and see if it works out. We'll go here. Okay, you buy a $1 million house. Okay. Some places that's nice. In other places, $1 million is not a nice house. So we'll just say, okay, you buy a house for $1 million. You pony up $200,000 in cash. Okay. Which means if you need that and you're 20, you don't buy a truck. Okay. The bank ponies up $800,000. Okay. Okay. So you buy it, you live there for 5 years, and then you and your beautiful person decide to procreate. And you're there another year or two, and then you procreate again, and then you're like, man, we're going to need to get a bigger house. So 8 years has gone by, and the house is worth $1,500,000. Okay? And you sell it. Cool. So you got to pay the bank back. Let's just pretend you didn't pay anything. Well, actually, no, let's try not to pretend. Okay. Over the 8 years, let's say you pay it down $100,000. I don't know if that's right, but let's just do that. So you pay off $700,000. How much is left? Is that right? Okay. But you lost $100,000 because you were paying your mortgage. Okay. So if you subtract that out, oops. Okay. You only have $700,000. So 8 years ago, you put $200,000 into an investment. Okay. Sold it and paid back a mortgage, got $800,000. But over that period, you put $100,000 into it, so now you're down to $700,000. But you, right? So you get your $200,000 back, and now what? You're left with $500,000 in real profit. Total, every single penny came from the property increasing in value. So you turned $200,000 into $500,000 in profit. All of that. You have $500,000 profit from $200,000 investment. After you get your $200,000 back, after you get your $100,000 in amortization, because remember the actual number, the absolute number is 800, But you had 100 into it, plus you put another 200 to get in, right? So even getting all that paid back, you have free and clear an increase in net worth of $500,000 from a $200,000 investment. Okay? 150% return. Okay? That's how you use debt. Okay? Now, you might have that money on paper inside this house. So let's say you never actually sell it, but you refi the mortgage. You could take some of that money out and put $250,000 in your pocket and leave $250,000 in equity. You see that? Now your monthly mortgage goes up, but you have an extra $250,000 in cash. What do you do with the extra $250,000 in cash? Buy a truck, go on vacation, get a giant TV, move to a fancier apartment, go out for steak dinners, models and bottles. Or you buy a second home with the $250,000. Because you know for $250,000 you can get another $1 million house. $200,000 to get the mortgage, $50,000 to fix it up, so then you can put renters into it. So now your second house, okay, is you put in your $200,000, you got $50,000 to make, right? New countertops, new bathrooms, spruce it up, new paint, new carpet, great. Pop a renter in there, and now the renter is the one paying down the mortgage, paying the bank for the 80% you borrowed to own it. The renters live in it. The renters pay the mortgage. It's the sweetest deal in the world. So 8 years later, when the house has gone up by 50%, do you pay the bank 50% more? No, you don't pay the bank anything. Plus, they don't get a share. They only get their 5%. And the renters are paying the banker. Well, for shizzle. Meanwhile, your net worth has gone up by another $500,000. You don't pay the bank anything. 8 years goes by. You refi it again. Take $250,000 out of this property, which is being paid for and amortized by the renter. Plus, you got $250,000 on your first property. So now you take those and combine them together, and you buy yourself a bigger house or 2 more houses or whatever. Put it in your Forex account. But the thing is, all of that is with debt. But if you drive a fancy car, but I drive a fancy car, but relative to my income, it's pathetic. It's a joke. You're like, Wayne, you're a cheap ass. Why don't you get yourself a nice car? Well, I don't have any money. All my assets are tied up, or all my, how do you say, money. I don't have money. I have a bunch of assets. I can't afford a $100,000 pickup truck. And again, it's because, well, I've spent that on education. I believe that's an asset, because I could tell you, if I invested $100,000 instead of buying a truck and I was 30, okay? And I invested that in the stock market, compounding. So I take all dividends and all profits and I re-up, okay? Compounding, okay, at 8% a year for 35 years, okay? This will probably be $1.5 million. And I look at that Ford F-150 and I'm like, I wouldn't give $1,500,000 for that truck. Okay. Oh, Wayne, the blogger, what car am I driving just for inspiration purposes? I have a Porsche Cayenne GTS Magnum. It's ridiculous. It's a show car, actually. But it's stupid. But relative to my income, it's dumb. I paid cash for it, of course. I wonder if I can find it. Porsche Cayenne GTS Magnum. Well, here's some pictures anyways. Oh. They're very rare. It essentially looks like this thing. My wheels are bigger. So you see it's wider and lower. It's all done by a company called Tech Art. I mean, they make some pretty nice stuff. So mine has lime green on it. So you know it's me. Yeah, I don't know. So they're pretty rare, but stupid. So I wouldn't waste money on it. Yeah, it's a beast. Yeah, it's loud. There's no doubt about that. But my point is, somebody that understands money gets their Lamborghini and Ferrari and Porsche, all that kind of stuff. They get all of that for free. That's what people need to understand. So those that are dreaming of owning something like that have to understand the concept of money if they're ever going to get it. Because again, like somebody that makes $200,000 buying an expensive pickup truck doesn't understand money. You can't afford an expensive pickup truck if you only make $200,000. It's so ridiculous. You need to be buying assets. So let's say that person deferred their pleasure for a while. And like I said, let's say we went through our these examples here. Okay, they buy a house. 8 years later, they take money out of that house, buy a second property, rent that out. 8 years later, so now we're talking 16 years later, they have $250,000 in if they take half of the equity out of the second house, they'll have $250,000. Then they take half the equity out of the first house, it'll be $500,000. Now they're smart with money, so they'll take the $250,000 from the second house and they'll buy a third house. But then the first house, they've pulled out $500,000. Could you buy your Porsche now? Where did the $500,000 come from? Because you worked hard? Because you were smart? Because you're good looking? Because you're tall? Because people like you? No, the value of your property went up. And you borrowed to do it. And now because you have debt, you have one property appreciating in value while you amortize. The second one is income producing and the amortization is free and the asset is appreciating. So you waited 16 years and now you can buy a $150,000 Porsche and just pay cash. You're just like, put it on my Amex and you pay it off at the end of the month. And it's nothing for you because the money was free. Do you understand? A poor person would lease it because they're trying to look rich. Okay? Going to the outlet mall, buying the sweater because it used to be $300. Now you can buy it for only $60. What you don't understand is they made the sweater to be a $60 sweater. That's not the $300 sweater. So there's our discussion about money. Looks like a lot of people are going to be there on Monday. Thank you for your interest. And really, you guys demanded me do this, so I really been trying to squeeze time. I have to call Japan now. And then when I've done that call, I'm going to work on Monday's presentation. Okay? So I hope I don't insult people when I talk so frankly. I don't mean to be insulting, but I do mean to be brutally honest. And it's important that I do irk or ire your emotions because because when we talk about these things, it's not intellectual. It literally is emotional. I have to appeal to a different part of the brain. And very often we have to break even cultural norms about money and debt. And to me, it is a class thing, but I'm part of that class. I come from lower class. And, we are taught debt is bad, that you should be debt free. Only a rich person would tell somebody that because they want to be debt loaded. Okay? You want to be loaded with debt because all you're doing is leveraging assets. Think about it. The bank is giving you 80% of the money for 5%, not of the upside, just 5% on what you'd call the strike price, if you will. Holy crap. Do you understand? It's unbelievable. What an amazing opportunity. What an amazing opportunity. Oh my God. They only want 5% of the starting for 80% of the investment. Holy crap. I will take that deal all day long. Do you see? I want as much debt as possible. So I gave the advice to everybody here when COVID crashed and money was free again. I said, get as much as you possibly can. I said, get as much of this free money as you can. You will never see it again in your lifetime. And I did that. I did it. And I know some of you did it. And yeah, when you're too old to work, I bet you anything that worked out tickety-boo and you're smiling cheek to cheek, ear to ear. Okay? So debt is good if you buy assets. Debt is bad if you use it to consume because you're burning money. Samu says, how do I sign up for QuantBox? You mean the actual service? Go to quantbox.co. Oh, I got to go. I'm getting pinged from Japan, Tokyo. Got to go. Hey, babe, that was beautiful, but I got to jump.